Hey traders, what's happening? Jamie Saettele here. It is January 17th, 2018, 117.18, and this is the midweek strategy webinar with SB Trade Desk. So can you hear me and can you see the screen? Should be the long followed dollar analog, of course. AV good, says Pooja. All right, super. So this continues to go. We're getting to one of the more important parts of this analog, of course, the crash scenario, right? Crash and then probably a sharp bounce, actually. So this seems to fit really well, actually, with the current sentiment and, of course, the levels that that we're looking at on DXY. Basically just it's I think Friday for just if crash low into Friday, and then a kind of a sharp rebound, into next week or something. But if we take a look at the levels, I put that in the post. I believe it was over the weekend. The main spot that I think we should pay attention to is, hold on here, for DXY. So you've got the 89.60, but I'm actually thinking it could be closer to 88. That's so if you the parallel from 2008 or trend line, excuse me, from 2008 2011, the parallel extends off of the August 2012 high, and then that was resistance in May and July of 2013. That level is going to be in line with the lower parallel from the bearish structure, which is very clean, right? So that's kind of where I'm looking in terms of an eventual crash low in DXY. If you do a fib here, you get 89.90 on the 1618. That'd be closer to 89.60. But don't forget, kind of crash markets tend to go, tend to go through kind of the obvious level. So that's why I'm thinking the obvious level being 89.60 gets taken out before you have some sort of a more important low. It's also possible, of course, that if we go back to this crash analog, that we do get the crash low or the very emotional low at 89.60, and then we actually rally a bit next week, and then the secondary low is actually down near the 88 region in this lower parallel. Okay, so this again is DXY. If we look at US dollar, then we are talking about, this is Bitcoin, by the way. We'll look at that. But if we're looking at US dollar, we're talking about probably, this is the chart from this morning. I think that we're probably going to be looking at, some sort of bounce from the trend line from 2011 to 2014. And that's going to be down pretty close to the 2015 low for May 2015. Is it? No, it's not the 2015 low. That was actually in the 2015 low was in January. But yeah, May 2015 low is going to be down near 11,634. If there is continued strength on a bounce, then we should see resistance on the red parallel here, which you can see was support throughout last year. It was even resistance back in August, support again in October, and the former lows are going to be from September, going to be 11,750. Not sure if we get any more bounce in the dollar at this point. If you do, my guess is it's probably going to be mostly something in like Aussie, maybe yen, although Obviously hope not, because we're short dollar yen. But because euro actually to me looks like it's just kind of treading water sideways here before we go for the 124.50 area. Okay, so let's move to euro quickly. Euro to me certainly is what one could call, extreme from a sentiment standpoint, right? We have the COT, which has gone, they've kind of gone berserk on buying up euro. Same can be said for copper, and same can be said for crude oil, by the way. We have records in all three of those. So we are getting extended here, right? This is not the time to be loose with your risk management or your stops. We're in an extreme environment here when it comes to euro strength. That said, I still think there's a couple hundred pips on the upside. All right, so back to the long held call, if you will, that we're making 5 up from January, the first day of January 2017. This to me does not look complete yet. If you look at a line chart, right? So 1, 2, maybe part of a 3, right? Maybe this is a 1, 2, maybe this is part of a 3. Be probably the best way to say it. I guess there is a chance that this is a actually, let's do the measurement. I don't think there is a chance actually anymore, is there? Because that would be the smallest wave. You cannot have the smallest wave in wave 3, can you? No, you cannot. All right, so yes, you cannot. This cannot be a diagonal anymore. So brings me back to what I was saying before. So again, the COT again extreme. Market can kind of fall apart at any time. However, I do think we have a little bit lower to go in dollar generally and euro in particular. So if we are looking at where we're holding, yes, we do have a big reversal day today. I'm actually kind of willing to ignore that. One day does not override, the months and months of analog work and everything else. We may have stopped here. Okay, this is the weekly open is 21.91. You have a square root level right here at 22.21. So we may have stopped on the downside here, and we could actually be in a triangle. So there are certain measurements that you look at with triangles. This is I'm working with an hourly chart now. Okay, if this hourly chart is A, B, and you can clearly see, right, that you've got these things are 3-wave movements, right? This rally is definitely a 3. This decline is definitely a 3. All right, that supports the idea that this is all corrective. Here's something else that supports that notion. If I draw this, guess what? Wave B, or proposed wave B, again, A, B, C, is going to be just about almost exactly 127.2% of wave A. So A and B. All right. Here's another thing. So what we're looking at here is maybe a little bounce A, B, C, a bounce in D, a pullback in E, and then the market's going to go substantially higher for its breakout move, in which case we would actually be looking at the measured move for this would actually be the 200% of wave of this. That's how you measure a triangle. Take the B wave. Would actually be 124.51. That is right on the parallel line, that we're looking for anyway for the target at 24.40. Okay. So the measurements are just work out very well and support the idea that this is a triangle. Okay, for us to complete whatever it is that we're completing from down here on 1.9, right? So 1, 2, and then you get the 3. This is all sideways 4, and then a 5 higher. All right, that's how I am looking at this. A lot of people, I'm sure, will say this is a 4 and a 5. Look, possible, but typically triangles are much more involved than that, right? They're usually they're usually not so simple. They're usually sideways affairs, oftentimes triangles, as we know. So that is my deal with Europe. Probably one of the cleaner things right now. Again, as you get more price data, you tend to get, things will clear up, and they're starting to clear up. So that's a good thing. So what we'll do here tonight, assuming we're kind of holding up throughout the rest of the day, is expect another long order. For now, it's probably going to be at the hourly low close, which is this close here at 22.19, which is a nice thing because you've got the square root level at 22.21. So essentially, it's going to be roughly the same place where you had the order from last night, which is 22.30. I'll probably have it like 22.25 or something. The reason I canceled the order is obviously we took out and went close to that 2008 low at 23.29 and then pulled back. So I didn't want to risk. The idea was to get into that before you went in and try to blow out the top side, not after. So that's why that was done. Okay. Moving on to cable. I mean, cable's higher. I can't in good conscience chase at this level. We got bullish after last week, after the 20-day touch on 111. We're just never triggered. So, what are you going to do? But if at some point we do get a deeper pullback, it's probably not going to be in the next couple of days. Again, keep this in mind. Keep the analog in mind. It's probably going to be, it could be next week actually, right? It could be on that move to the upside, right, from down here in the dollar. So we could get additional strength here in the near term. You can see right now that we are testing the March 2016 low. We'll look at a weekly chart in a little bit, but we're testing this level right now. I don't think that, again, there's better or decent resistance or whatever you want to call it until we get up into the 139 region, specifically the 75 line from the longer term chart. And then if you did go to the median line from back here, what you're looking at is something a good ways above 139. So, still higher, but not really willing to chase right here. All right, let's look at let's actually, I'll draw this out with you. Let's go to I'm looking for it. Should be all right. Let's try this chart. Okay. All right, so log chart is what we need. So a couple of things. If we go to and draw the long-term channel, and it's key, you got to draw it on log, okay? But remember, the thing about median line analysis is you get symmetry. So you had the 25 lines as support, or sorry, 17 line as support, 75 line as support. I can't talk right now. And then we're looking for the 25 line as resistance. It's a weekly chart, right? That's going to be, more or less in line with the line that was resistance prior to Brexit. It's clearly, a bit more, a bit above that level, right? So you might want to pay attention to the median line, which is going to be 139.60 or so. But then the other thing is we're looking for the original trend line off the low, which I'm going to call this one, right? And then extend that off the highest peak. And that's going to give you a estimation for resistance. So we know it's 15 degrees, 15 degrees. Again, you got to do it the degrees because it's log scale, and that gets you all in the same area, right? You know, if we give it a range, it's basically 39.10 to 39, 50, 39.60. And then if we look at where we have, let's see here, where we have the square root levels, which pound does seem to like. The next square root level for cable is actually 39.64. All right. So, you know, if someone said to me, you have to give an answer onto where there's resistance in the British pound, my guess would be 39.64. Okay. And then I'd be looking for a pullback, but then higher. So this, again, for cable here, not trying to chase it right here. But 39.64 would be an area where I'd actually, you know, look for a short. There's so much up there for resistance. Okay. Now let's see if we can find support anyway for those willing to trade from the long side up here right now. So do we have any high volume days? Actually, the breakout from Friday was a high volume day. Nothing on the near term charts at this point. Yeah, I mean, there's just nothing. There's nothing else for me to work with here, right? I mean, there's no week open. There's nothing. Oh, this is actually a good time to bring up if there's anyone in here who would ask questions before. I saw on Twitter there were some people asking about, you know, they didn't have the information for the alerts, right, that are sent out when I turn certain alerts on at certain points in order to attempt to get into trends. So those are on the 4-hour chart. So here's an example, right? You should have seen a couple of them trigger. This is Euro. You would have had triggers on the last 3-4 hour closes actually, right? Now these are, to me, they're alerts. They're not specific signals, but it's just telling me that the market's dipped enough where Euro can go higher. That's all, okay? Pound actually did it. You can see it would have done it at the close of the midnight bar last night, and then pound can go higher, right? So that's been turned on. So I had Euro turned on, pound turned on, and even dollar yen turned on, in which the rally, and you got the little red dot here, right? So if you receive those alerts, if you're signed up, you should have received those. The other ones, of course, that are sent out are the 10-minute bars, and these actually never go off, and these are only from Europe until the end of US trading, and these are called the dip and rip alerts. So they're very, very short-term alerts, right? And obviously you'll know they're short-term because you'll see multiple ones a day. Okay, all right. Let's move on. But if you don't get those and you do want to get them, then email info@sbtradedesk.com. Okay. All right, moving on. So that was cable. So my notes here, higher but can't chase here. Watch in conjunction with analog. So basically thinking that you get up to 39.60 and then time for a pullback. All right, dollar yen, still like it lower. It's not really breaking down like I thought it would after breaking through. We broke through this median line here. This is the daily chart. I guess the slope is pretty good here, though. You know, you are riding on the 75 line, hoping the stop is not too tight at this point, because the center line or the median line should be resistance now. Again, we're looking towards basically the 109.40 to 109.60 area, right? The lower end of this is going to be 109.40s. The upper upsloping, you know, parallel, which again goes all the way back to 2011, that's going to be more like 109.60. But the area is that we're looking for is pretty clean, and I'd be looking for a bounce there. So again, all else being equal, thinking we get down there by Friday with the dollar crash analog. All right, going into the intraday chart, again, pretty good levels. Hoping that it's not too tight. The stop, which has been moved to 11.20. We had the week open at 11.06. That's, you know, one reason I kind of was willing to move it, because at this point, after we went to a new low yesterday, we shouldn't really be getting back to this level, right? If we're really in a strong down week. So, I mean, here's your target, right? Pretty clean. So looking down here for 109.60. You got that spike low down there from 9.15, which is 109.53. So good spot there. You know, this goes hand in hand with gold, of course. And if we do get kind of a, you know, a bounce from down here, we might actually, it could coincide with some sort of a minor top in gold, metals generally, but gold, you know, specifically. Okay. All right, Aussie dollar in the kind of never-ending slow advance. Have we finally run into a level, right? So there's a couple things with the Australian dollar here. The median line, again, this is arithmetic scale, but it's the median line from the 2016 low. So we're just looking at a channel. I mean, Aussie's been in a channel the whole time. You know, we identified the low down here. I did not get any entries triggered. Something that I'm working on personally from, you know, moving forward is when I have like a really good idea, right? Like I'm going with trend, you know, got all the analysis done, blah, 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 rather than try to be so, what's the word? So, you know, specific, right? With entry, I'm just going to maybe go in at market and send out alerts to do that. You know, certainly it's helped me at times being extremely specific, but we're also going to miss out on some things, right? Recent examples are really good ones. I mean, the Aussie one where we got bullish at the right time, but never really got in, right? Because those best trades are the ones that are really hard to get in, right? They just kind of go. British pound, great example. We got bullish last week, never got in, right? Put the order at 35.05. Market never dipped, not for one tick on Friday. Went straight up. Okay. So the right ideas as far as being, you know, turning bullish the Australian dollar in early December, just crap execution. All right. So with the Aussie, now that we have rallied into the median line, you know, I'm thinking potentially, I guess, that we could see some sort of a pause here, right? As silly as that may sound. But copper's coming off pretty good, and we'll look at that in a moment. But I do want to shift real quick to the Chinese market, right? So one of our arguments back in December, early December, was China, right? FXI. So we've continued to go higher. I thought yesterday was a top, clearly was not. We are at the underside as well of this trend line from 2008, 2013. That line was actually resistance back in 2015. We're back at that line now. So if we're going to pull off at all anywhere in China, I would think that this is probably it. You know, got the good structure here. You've got the shorter term tight structure, right, from this channel, which we are actually now above it. So maybe this is some sort of a throw over. But yeah, China's gone straight up, right? 45, you know, 44 to 51. I mean, it's a big move over the course of 1 month and a week, 5 weeks, basically. So big rally up into this area, currently a throw over, and I am looking for some sort of a pause and a pullback here. You know, this 1, 2 looks like a 3, pull back in 4, maybe 5 back on the underside of this line, in which case we'd be looking for a pullback probably in the Australian dollar as well, along with things like copper, right? And if we go to copper, so on the weekly chart, you can see copper is trading on its 2011, both 2011, February, August 2011 trend line. And we kind of broke above it, and I guess that was late December. And since then, we have churned sideways and turned down with a pretty nasty looking bearish week right now. Moving to the near term chart. Here's a 4-hour chart. You can draw a pretty decent bearish fork right here, and I would be looking for resistance probably somewhere in this, you know, in this fork. Okay, you go to the 240-minute 4-hour chart. This is going to be your 20-day average, and I would look for that level to provide resistance in the coming days. Okay. So we're seeing copper turnover. China's yet to do so. I thought it might have yesterday, is yet to do so. Aussie's yet to do so, but we're pressing into the right area for that to happen. Okay, and we'll look at Euro Aussie here in a bit too, which I think may offer some clues as to, you know, what's going on with the Australian dollar generally, right? Euro Aussie helps us understand that as well. All right, Kiwi dollar. Kiwi is one of these that is also just continuing to, so, you know, melt up, or whatever you want to call it. And at this point, you know, we had 72.70 as a level. That was the 618. 72.60, 72.70. Thought we would have had that on, I guess it was Thursday. No dice, and at this point I don't, you know, I'm guessing, I guess 73.60, which would be the center line from the channel back from the 2015 low. You know, that could be an area that provides some sort of a pause. I still, you know, want to be a buyer of Kiwi weakness, but looking for a bit more than 1 day of weakness. And 71.60 is a level at this point. 71.85 is a level that is a square root level. It's also resistance from back here in October. So nothing clear for me right now on Kiwi. It'll clear up in time, but just nothing there for me to really offer at this point. Dollar CAD, I think Polos or whatever his name is might be speaking right now, but I don't have his comments up. Not sure it matters a whole lot. You've got that, whatever happened after BOC was pretty intense. Here's a 5-minute chart, and you can see, why don't we go to 1-minute chart, make it real crazy. So you had this move all the way up to 25.20, traded up to about 25.40 or something, and then it came all the way down to 23.50, and now we're kind of, you know, not really moving around a whole lot. So going into this, the idea being that you had resistance up at 25.20. that has proven true. Let's see how the day closes. There's no need to guess intraday price action here and try to figure out where the market's headed in the next 5 minutes. My guess is that we finish, probably we might finish not all that changed on the day, to be quite honest with you. But if we look at the volume level, we have a good point of reference to use here, okay? And that's going to be obviously the hour of BOC, so the hour that just closed. All right, and that close level on dollar CAD is going to be $124.59. Okay, so at its core, 124.59 is essentially a kind of a bullish bearish dividing line for dollar CAD. So kind of in a rock and a hard place for me, because if you look at the daily chart, you've got great resistance from a number of parallels, but the most important one being the trend line back to 2012. That was major support for years. And then we broke below it, spent a little time below it, not a whole lot. And then you can see just at the end of the year and early this year, you do have good, reactions on it, like it's still in play, right? The market's responding to it. It's telling you that there's still, there's still action there. So I don't know. I'll be interested to see what some of the fundamental things say, about CAD. It seems like right now the knee-jerk reaction is that this is a so-called dovish hike, right? In which case you'd expect dollar CAD to go higher, but I'm not seeing a whole lot of agreement. So I'll be looking for significant agreement to see if there is actually reason to fade it, right? If we start to see the headlines suggest, yeah, dollar CAD is headed significantly higher because of the blah 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 dovish hike, we'll have an idea that we want to fade it. But for now, just know that 24.60 is a pretty good dividing line in terms of bullish and bearish strategies for dollar CAD. Okay. All right, let's look at some commodities: gold, silver, copper. We'll look at the S&P, of course. We already looked at FXI, the Chinese market. And we'll look at Euro Aussie as well. Okay, this is copper. We looked there. Let's look at gold. So gold is on the median line. A lot of energy around here. It's cleaner on the weekly chart, right? But if you can scroll up this way, you can see just how clean that center line is. So, look at all the action that was on it. You had resistance there. You've had support there in 2016, support there in 2016, and then the big rip off the election, or into the election, excuse me, resistance back into April of 2017, and then here we are now again right at it, right? So certainly a major level. And Mahai saying S&P DAX and a good level to short Bitcoin. Yeah, so we'll get to Bitcoin for sure. It's definitely a instructive market, right? That's I mean, you name it, that's just behavior in action. I mean, it's beautiful to watch. All right, let's take a look at the daily chart. So I am thinking that we pause here for a little bit, and if we have a decent pause, then we're probably going to get stopped out of dollar yen. because if this is a high, if we pull back here, then dollar yen's probably going a good bit higher, right? Maybe back to 1160. I don't know. You know, I'm hoping we get the quick flush down to 109.40, 109.60, but all we can really do is, you know, manage our risk. At this point, we've got a little bit of a gain in dollar yen, and then we move on. All right, so if we pull back from here in gold, the big level that I think is probably, you know, going to be watched for support, or that should be watched for support, is basically around is pretty much 1300. Okay, you know, even going all the way back to 2011, you had support at, you know, near 1300. All right, that was the last support before we went into a, you know, complete you know, parabolic move in gold back in 2011. So that's what I would watch for here with gold. You can see that resistance was back around just above 1300 in January of 2015. It was resistance in May of 2016, right? You kind of traded around there before the election. Of course, you had highs in April in June of 2017 of last year, and since then, just look at the areas. I mean, clearly a pivot, right? 1300-ish. Okay, so not being, you know, like super precise here, but 1300, give or take, is a big spot, and that is where I would think that you probably find some sort of support in gold. Okay, now, do we get all the way down there? We traded almost 1346, so we trade 1344. A $40 drop, which sounds like a big drop, and certainly it is. But I certainly think it's a possibility. I mean, the market's gotten really bullish gold in a pretty short amount of time, right? Remember down here, those articles about, you know, gold is, you know, no one wants it and it's worthless and it's stupid to trade it because it doesn't go up. And, you know, since then you've gone up, you know, $100. Okay, a correction of $40 is within that run is actually pretty normal. Wouldn't even be half the move. So that's where I'm looking as far as major support in gold. And then if we look at silver, we've actually traded into the trend line back, or the line, I should say trend line, but you can call it trend line now because it's touched for the third time. But the line from July of 2016 and September of 2017. Okay, so we tagged that 2 days ago. Market's going to pull back here, and I'd be looking for support. It's, again, this same thing I said last week. It's not as clean as the gold chart is to me, at least the levels are at this point. You know, but maybe there's support down near 1630, 1640. Got a big level, a big volume level down here. Not as clean, so I would just watch the gold chart for clues on when you're gonna, you know, when support comes in for, you know, when support comes in for silver, right? Watch the gold one. You know, back here was a different story. Remember in early December, we were watching silver closer because we thought that's the market that's cleaner. And it was. That had the much cleaner support. You had the 3 waves down. You had all the stuff here, 618, median line, yada, yada, yada. You had a ton of stuff. You know, but now gold's the cleaner one to watch. So it's okay. Don't have to have an exact level on silver. Just know the gold level around 1300, and you should be okay with silver. All right. Copper. We already looked at copper, so I'm not going to go back to it. S&P 500. Okay, so we are thinking that you could have a correction into March based on this. So this is the actually says next week, but you know, this thing, don't expect it to be perfect. This is the match from the 87 crash low. I went in detail over it last week, so I'm not going to talk a whole lot about it right now. But yeah, am looking for something of a corrective move lower. Now, if we do actually get a 10% drop in the course of 2 to 3 months, I'm sure that it's going to feel like the end of the world, because the market, I don't think, has dropped 3% like in ages. So, keep in perspective if this starts to happen. But the level that I'm looking for, this is the CFD. Let's go to the, I've got it better on this chart. Go to the cash chart. Okay, so this is the S&P index. All right, it's the shift fork. Okay, it moved. So again, that's shifted in time and price, not just price. And we are looking at the parallels that extend off of the resistance back from 2014 and 2015, right? So the very top one, the uppermost one, is going to be up in the 2840s, okay? The lower one is going to be like 2820-ish. Obviously, yesterday we got pretty close at 2807, but we didn't get there. So, I don't, like I said last night, I don't know if we've hit top or not. Being a kind of simple with this stuff and just trying to keep it as simple as possible, I'd rather see us hit the actual resistance line before I, try to trade the short side of what's been the most insane bull market ever. No need to fight that, but there will be a time to fight it, and I'm hoping we get to 2840, because that'll be a great time to do it. If I go to the short-term chart, let's go to the intraday chart. This morning, initial sell-off. Okay, thought that we might have, an opportunity to trade lower in a third or something. Like anything, this is why we have our tactics that we can use, right? So for argument's sake, let's just say, so we've retraced 61.8 as well. There you go. Let's just say that, let's just say for argument's sake that this is a top, all right? We don't know if it is. Let's just say it is. What we'd be looking for is trade within the parallels to validate it, and then we'd have a better idea that there actually is some sort of a top in place. Until then, there's really no need to guess here, okay? Until then, wait until either the 28, 2820 to 2840 area in the S&P, especially 2840. That's the 2840 area is the square root level. $28.39 to be exact, okay? Here's a daily chart. So yeah, 28.39 is the third square root level up from the year open. Pretty crazy to be at the third square root level within this, basically the third week of trading. But you've also got this fork here. This is just a channel, okay? Maybe tag the top at 2840, and then we would have a square root level and a couple slopes, one very long term, one shorter term. So that is my best guess scenario for you on the S&P 500. Certainly, whenever it does come off, it's going to get, I'm sure it'll be nasty, because this thing is as crowded as Bitcoin, right? You've got the sentiment all in on advisors, on short-term traders, on you name it. All right, let's see. Mahai, I know, wants to look at DAX, and I'm sure others do too, so we'll go there. Also, let's take a look at Bitcoin, and then we will look at Euro Aussie, which is one that I'm following closely heading into the next few days, which you've got Aussie employment tonight, right? Yep, 6:30. So that'll be an important data point to pay attention to trading wise heading into this evening. So obviously nothing's changed with our weekly chart here. Same thing, we rolled over in October, November, and really we haven't done anything since then. So just kind of being held up here. My guess, my inclination is that this is still a big complex fourth wave, right? I mean, you've got this divergence with the the DAX and the S&P obviously at this time, where the DAX is well below, it's not well below, but it's below its high from November, and of course that's not the case with the S&P. So what do we have here? Is this a 3 down? If that's a 3 down, then that means we're going into an extended move. There's also possible this is all complex, 3 down and then 3 up. What I would do from here, 60-minute chart, which I mentioned, I believe, last week. We had the daily reversal support, which was right here. Yes, it was. We're failing at daily reversal resistance. I would still pay attention to 12,888 for support. Trade from the short side as long as you're below this high, because you did fail at daily reversal resistance. But I'd be sure to take some off the table or get out completely at 12,888, maybe even turn bullish. Okay. And you can see you do have a there is a parallel there too. So this is the channel back to 2016. It's pretty clean, and the upper parallel is the one that you've been finding resistance on lately. But the 75 line, which has been in play for some time as well, that is also in line with this 12,888 level on the DAX. Okay. So yeah, I'm looking lower, but then I'd be getting out of here as a trade. Beyond there, I don't have much confidence, right? I mean, I've got us at long-term resistance, but we've been at long-term resistance for like 3 months. So I will leave it there with the DAX. All right, Bitcoin. So Bitcoin is, remember we had identified some pretty good levels in the analog from silver. So this is a bounce level, okay? The origin points of this, the August 2015 low and the April 2016 low, all right? So you just draw yourself a channel, and then you add the width between the median line and the upper parallel. Okay, so that's 1 add, 2 add, 3 adds, 4 adds, right? And you see what happens. Each parallel actually ends up being pretty influential. So the first one was resistance, then support. The second one was resistance, now it's support. Third one was actually pretty much nothing. The fourth one was actually resistance at the top. So what I think is happening is, I think you're going back here, which is 6,600 or so. That would actually be the 200-day average. You'd slice right through it, and back here is actually where I would consider buying it, probably for just a trade, because I really do think that Bitcoin is kind of silver from the 70s, 80s, as I've said a bunch, and I think that it's probably going back towards its kind of blow off point of origin, which could be down in the 2000s, believe it or not. So from here, if I were looking at this from a, setting up a trade or something, you're at support, look for a bounce, resistance, watch the median line, right? 12,000. You can see that median line was really solid support. I guess that was yesterday. No, that wasn't yesterday. That was 111. So that would have been a week ago. 12,000. You've also got the low here from 1230. So 12,000 is resistance. You might have resistance at 10.6, but I would look at 12,000 as resistance, considering that the moves tend to be pretty outsized. So at this point, you actually have a bearish channel to work with. You can see how clean that is, right? Bounce back to 12,000 and then look lower down to, again, that 6,600 area, which is going to be this line, all right? So that is my idea, so to speak, with Bitcoin. Remember, we have the silver analog, which I think is should still be paid attention to. It hasn't. It kind of like got ahead of itself a little bit, and you have to kind of move it, right? But the idea remains the same. So you're in the area now where you could be looking for a bounce, right? First top, second top, maybe here. Third top is the one that you want to sell. I think 12,000, and then bye-bye. All right, so that fits with the silver analog, but the levels are pretty clean themselves, aren't they? With Bitcoin. What else? We have the other Bitcoin comparison as well. Here we go. So this is kind of the updated one. This is one that, if we go sideways, which I think is actually going to happen, essentially sideways and for another couple months. All right, doesn't change what I think on the near term. Basically selling 12,000, taking it down to 6,600 or whatever, and then it'd be a buy again. All right, so there we have Bitcoin. Hope you can use that to your benefit. Let's go then to Euro Aussie. Okay, so Euro Australian dollar, we've got all right. So 7 waves down, right? 1, 2, 3, 4, 5, 6, 7. In Elliott, that's a double zigzag, right? A, B, C, X, A, B, C. You've got good support under here from the August high, which is right here. You could be in just a very wide-ranging, corrective thing. I'm not calling for some major move here, but what I would watch for tonight is support down near 52.80. All right, you've got what is it, 1227 low, and it's probably close to the 618. 52.65 is 618. So not far, but yeah, Aussie employment, and with Aussie coming into 80 as a potential resistance area, right? At least for something of a pullback, for Christ's sakes. And Euro looking to me like it still has another run higher. With what I think is a triangle right now, I'd be looking at, coming into a Euro Aussie low tonight, right? Just my thinking with this, I will, as usual, me personally, I would rather be trading Euro to the long side and then try to trade Aussie to the short side rather than trading Euro Aussie itself, unless there's just like the cleanest of clean looking reversals or something. But I did want to share this chart because it is actually fairly clean and makes some sense, right? You've got 5 waves up, 1, 2, 3, 4, 5. looks like you're getting a 3 down, A, B, C. All right, so pay attention to that tonight. We've got a couple minutes left. Is there anything pressing that anyone would want to look at for heading into the rest of the week? Going once, going twice. And nothing. Okay, nothing for now. All right then. Thank you, Pete. Thank you so much. Thank you, everybody. Wrapping it up here then. And again, got the Aussie employment tonight. So that is kind of the next big thing on tap. I'll be seeing if we get some exhaustion or reaction at 80 cents in Aussie, but yeah, relentless at this point. Okay, have a great rest of your week. As always, thank you all so much for your time, and have the update out later. Okay, take care.